Hello everyone, welcome to the 13th episode of Breakfast with Jorge. This is Al Circle with Jorge. Hello Jorge, how are you? Good morning. Before we drop into the video, today we are organizing these things on a Sunday morning. I'm from India and Jorge is, as you know, he always keeps on traveling. So let us see.
Hi, Prorana. How are you? Al Circle. I'm so good. Here, as you know, I'm having my breakfast. But to anticipate to your question, I'm just having coffee. I woke up very late today. It's Sunday. And as you know, we are living within the environment of the World Cup 2026. I'm based in Miami. And it's a big party overall, particularly this weekend. Most of the teams have played the second match, and it's very interesting, very, very important. And the big news here is that after Messi, and my heart is with Argentina, I am from Argentina. When Messi arrived into this country, a sort of revolution started. In addition to the revolution started by the AI in copper and aluminum, and the soccer, this is the way we call it here, the football, is booming everywhere. And to my surprise, I tried on Friday to come and see the US game, and I couldn't get a place in a restaurant. And it was fully crowded by Americans. So anyone who has interest in football, so industry or commercial or financial or whatever, pay an eye on USA.
And that's great. What are the key drivers of the last weeks?
Well, those 2 weeks have been really very, very active.
Yes.
We have the apparently peace agreement between Iran and the USA. I doubt it. I doubt it because I see the news that the Strait of Hormuz was again closed.
Yeah,
Today's
right.
Sunday, June the 21st, that it was closed again yesterday. And it's sort of messy and tricky. But in between, what happened is the price of the oil came down from the highest, which was around 122, to a lowest during these last 3 months of 75, still $10 over the average lower price, which was 65. And remember that there is a $5, $5-ish difference between WTI and Brent. But having said so, the oil has still a room to come down further, $10, if the situation solves, of course. And what we see in the future curve, because remember, when we speak of futures prices, we speak of the cash and the futures prices that are quoting today in the futures market. Were in backwardation, in a sort of strong backwardation in the past, $5, $6, $7 backwardation. But now the curve is flat. That means that the market has found a sort of equilibrium, but in my view, it can become volatile again based on what we see. So at the moment you see this episode, perhaps those prices I'm talking about are going to be old, which is not the same with copper, which is again in the range of around 14,000, and it's strong and it's steady. And on copper, we have general news, but nothing in particular. On the aluminum, we know, and you have published a lot about the decrease of the production in the region due to the destruction of some smelters. But the big news is that
My God,
the
okay.
cash price of the aluminum has came down $450. Listen to this, $450. It's sort of 13%, yeah, in a very short period of time. Was that war related? Of course, you never have those reactions in terms of supply demand in the industrial sector. You always have that because the funds, the speculators that participate in this market, drive strongly. In this case, will be selling, of course. Otherwise, the market would have gone up or stay steady. But why so dramatically? Because once people start unwinding position, there is a lower spiral, forcing more shorts to unwind their longs. Everything's speculative, and there was a very heavy position on the third Wednesday of May related to options. So if you start to unwind options, with the broker who has to buy the options from someone who has unwinded needs to sell in the local market. That's a technical delta trading. Not to confuse yourself, you should see the important decline.
You just said aluminium dropped to $400. Like, what really happened?
Yeah, you ask again, 400, yeah. 400, yeah, it's a huge number. It's a huge number. It's not a normal number. And again, what happened, as I explained, is related to the fresh news on the war. It's not that there is a new smelter coming up out of the blue. And I mean, we can't do anything based on what has happened, but we can learn of what has happened to take some
Okay,
actions.
that's pretty good. Now, like based on your upcoming course, the collaboration of Al Circle with you again, like hedging for recyclers, can we discuss a sort of things about what is this upcoming course will be all about? Starting with that, let's start. What lessons can we learn from the course?
Yeah, this is where I can add some points because I'm not just focusing on the aluminum, but let's take aluminum as an example for recyclers. I mean, normally you can have a very comfortable situation. This is when the buyer buys cash and sells cash. The traders buys cash, sells cash. The difference is the risk. The point appears when both of the quotational periods of the purchase and the sales are not alienated, are not alike. When you have such a difference, for example, buy cash, sell, I don't know when. Buy cash, sell for a price that is going to be discovered within 1, 2, or 3 months. Okay? There, in this example, if you buy cash and you have the risk of the prices coming down, imagine those $400. I mean, the way to protect that is to hedge, which is to find the protection at the LME. I won't speak of the technicalities. I will speak just of the concept. So imagine that using a tool, you can assure any price that would come up. You can have an insurance against the price falling down. Okay? Insurance. Okay? So you get the insurance and you don't have any problem. But you have the insurance. In this example, using futures as a tool, you won't be benefiting of the upside. In other words, if you buy at 3,500 and you sell futures at 3,600, if the price goes to 3,700, you are losing the opportunity using futures, which you are not using options. On the other side, from the consumer point of view, Uh, you know, uh, of course, if you sell fixed price and you got the metal, but your supplier didn't fix the price of the metal, yeah, you have the risk of the prices going up. And then there is where you also hedge using futures, locking in the economical structure, using options the other way around. So paying a premium and having the possibility to lock in the economical structure differently. Okay. Um, and other than that, um, imagine that the market is very quiet and non-volatile. Okay, you have another problem. For example, let's suppose that you, and let me put it again in very simple words. You buy the product, whether it's copper, whether it's aluminum, whether it's lead, whichever. You pay for it, okay? And you agree with the customer that he is going to price, or you are going to price your sale based on the prices of, say, July, okay? And we are now in June. So let's suppose that you go into the futures market and you have your insurance protecting you against the fall in prices. And let's suppose that your customer requests an extension. He won't be able to take the delivery. He wants an extension of the QP, of the pricing period. And in simple words, you have to renew the insurance for 1 more month. And that, in terms of being short in the futures market and facing a backwardation, which is the futures price lower, you can really lose a lot of money. And this is where you have to anticipate yourself in terms of using the tools that the LME is, or other market, the Shanghai Futures Exchange or the CME are providing to us.
Okay, great, understood. So the second important question is, who are the people who should attend this course?
Uh, of course, my view, and I've been doing this for decades.
Yeah.
From a junior to a senior, everyone is profiting from this because the junior learns everything from scratch, while the senior knows, but he will reinforce his knowledge and he will create more ideas. And the dynamics I use when teaching, making people participate, doing role playings and everything, is taking advantage of someone who would come with a higher knowledge to put it on the table and work on that. Yeah, and we all benefit from this. So from juniors to seniors, from traders to producers, for recyclers, this seminar is for every one of those.
Okay, so great.
Well, thank you so much, and see you next time in Breakfast with Jorge, which is Breakfast with me. See you. And I hope that Argentina makes it, but we are going to see each other before.
Yeah,
I
yeah,
mean
yeah,
the
yeah,
World
yeah.
Cup. Bye-bye.
Thank you so much, Jorge. So as you saw, you got the football updates, the market update, the drop in aluminium price, a short introduction about what the hedging for recyclers course will be all about. So if you want to catch up the global trending market updates on your feed, keep following us. Drop your comments in the comment section of what all the other things that you want to know from us, as we have an expert with us. So like that, thank you, stay tuned.